Good afternoon. This is Russ Murfitt coming to you from Friday afternoon. I thought I'd give you a bit of a market update with the volatility that we have seen this week, and the timing works out pretty well to look at some proactive things that we might be able to do. So I put together a presentation to go over with you. So let's go ahead and get started. First thing is to let you know that there are some things changing, and wanted to give you some proactive guidance on what to expect coming forward. One of the first things to remind you of is that we do a number of things in financial planning, and the 5 key areas are preservation planning, retirement planning, tax planning, estate planning, and investment planning. Of course, the primary thing today is going to be investment planning as we look at that going forward. I always have thought that it makes sense to have clients that are familiar with the markets, and knowledge is power. The more you're aware of what's going on and the more familiar you are, the better. I think it makes sense to have clients that are well educated, so we'll do our best to try to give you more of that information. So let's go. Looking back at 2020, investors had a very unusual ride. On February 19th, S&P 500 closed at a then all-time market high. Without warning, COVID came to bear and became a worldwide pandemic. Investors saw a 30-plus day decline. The markets dropped over 33%, which bottomed finally on March 23rd. If you didn't panic, good news came in August when the markets again closed at an all-time market high. If you stayed in it all through there, by the end of last month, April 2021, markets again made new all-time highs. They seem to be doing that on a regular basis. Interest rates are coming to the forefront, though. With vaccinations being distributed, the economy on the rebound, the Federal Reserve offered an improved economic forecast during its March monetary policy meeting. And despite the predicted upward trend in the economy and inflation, the majority of Fed policy committee members remain steadfast at keeping their Fed funds rate at or near 0% as they moved into March of 2020. They cited that 2024 as the first year they anticipate rate hikes, noting that the Fed needed substantial further progress toward unemployment numbers and price stability before they could raise their rates. Safety, however, comes at a cost for investors. According to Barron's, the average bank money market rates on April 19, 2021 were 0.07%, and the average 12-month CD rate was 0.18%. I was looking for CDs this morning and found that 0.06% was available for 6 months. At this rate of 0.18% before taxes, it would take you 350 years to double your money. For many investors, today's low rates might not help them reach their goals. Therefore, equities or stocks could be a part of your overall diversified portfolio. The past quarter brought investors many tempting distractions. Media magnification is a powerful force. Sensational headlines can leave investors overwhelmed, stressed, and confused. Our objective is to help you carefully create and follow a strategy with realistic goals. Veering off course in the hopes of short-term gains could potentially compromise the financial fortitude of your long-term plans. Call us if you have any questions. I enjoyed explaining Bitcoin today to an investor who's 85 years old. So stay tuned. If you're having questions, don't hesitate to give us a call. Also, your health's important. And if the stress is bumming you out, making a difference, give us a call. Let's help you keep things in perspective. An essential factor when you're selecting the types of investments to include in your portfolio is time horizon. This is the amount of time you earmark to reach your goals. An investor that can commit a 10-year time horizon can review different choices compared to someone who needs the money in 6 months. Investors should always try to match their portfolios to their goals and time horizons. Not often done, or not always done. This can help you keep the big picture in mind and hopefully can curtail any distractions caused by short-term developments. This is something that we enjoy helping clients with. If clients are focused on their long-term goals, we can manage any anxieties caused by these short-term market noise factors on the volatility. Our goal is to help clients avoid making impulsive investment decisions. Another key investment factor that you can control is your risk appetite, or the amount of acceptance that you have for risk. Something that I would offer is that if you would like to do a new risk tolerance questionnaire, be happy to send one out to you. Once we establish a risk number, we can evaluate whether your portfolio matches up with that. It's a great thing when everything is working in sync. One of the things that you can do to control, you can look at the risk, your time horizon, and your own behavior. The things that you can't control are the return, but we can do the things that lead to making better decisions long term. Reviewing your risk appetite to see if it has shifted, or checking to see if your time horizon has changed, is always important. After you fully outline or update these two foundations of your investment strategy, then you can match your behavior to your investment plan. Something I enjoy helping people figure out. It's not always just about which fund, it might be about what your overall tolerance for risk is all about. Typically, the most successful investors think and act for the long term. It's nearly impossible to predict the exact market movements. However, you can prepare. For example, this week, we saw plenty of market volatility. It's always present. Equity market downturns and declines are a normal part of the investment experience. Big drops earlier this week, followed by returns back to normal markets, happened this week. I would expect to see that happen again. And really now is an excellent time to move forward with confidence if you've chosen your investment goals wisely. And remember, equity markets are currently high, and we always alert clients when we need to proceed with caution. Recently, to talk about some proactive tax planning, President Biden said he was going to recommend some changes to tax rates and the laws. While nothing is currently approved, this is something we'll be watching closely, and we'll keep clients updated and informed as things progress. The proactive tax planning that involves the SECURE Act relates to how retirement funds get transferred to heirs. To try to offer our clients better flexibility on minimizing taxes on their retirement funds, we'll be discussing with clients, where appropriate, the strategies that come with designating both primary and contingent beneficiaries. Another proactive tax planning topic we want to be watching is that in March, Bernie Sanders filed a Senate proposal called for the 99.5% Act. What a catchy name. This proposal was to reduce estate tax exemptions from the current level of $11.7 million per person to $3.5 million per person. The estate tax rate under Senator Sanders' plan would start at 45% and grow to as high as 65%. This is a proposal we will be closely following, and as things develop, we'll update you and talk with clients that could be affected by it. As a recap, here's some key points. Despite continued volatility, equity markets in 2021 have started on a very high note. Interest rates are expected to remain low for the foreseeable future. The economic recovery is still largely based on vaccine distribution and reduction of COVID-19 cases. We got some good news on that front this week. And a new administration continues to bring new changes and new proposals. Also, Caution and vigilance are critical. Please avoid distractions that sway you from your path on your goals. Focus and make sure that your time horizon and your risk appetite are congruent with your goals. If you're feeling like things are making it uneasy, it might be a great time to call with any concerns and see if there's something that we should be taking care of. The business partner for Warren Buffett over a very long time is Charlie Munger, and he said that it's waiting that helps you as an investor, and a lot of people just can't stand to wait. So, what to expect from us going forward? One of our main focuses is to review changes for our clients on an ongoing basis. You can expect regular communication, more frequent discussions, and you can expect that we are continuously reviewing economic, tax, estate, and investment issues for our clients. In fact, we'll be offering some other workshops that highlight tax changes and other planning ideas. We appreciate our clients, and as a client benefit, if someone is important to you and you'd like to have this information sent out to them, please let me know. If they're important to you, they're important to us. If there's anyone that you would like to get this, please share it with us and we'll be happy to send it out to them as well. One of our main goals in 2021 is to continue to help additional people. And some of our best clients were referred to us from existing clients. So if someone thinks like you and they could appreciate the information and would benefit from our expertise, we'd appreciate passing our name along to them, and we'll work to help them as well. That's it for now. I appreciate you tuning in, and talk to you soon.